Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 2nd of December 2016 and it's also the first Friday of the month, which means it's non-farm payrolls today. So I'm not going to call out any particular trap, just to say be a little bit careful of this particular non-farm payroll, as we do have some big risk events which are occurring over the weekend. So it may be prudent, if you are going to trade non-farm payrolls, to only hold your positions until perhaps the end of the session, end of the day, as you will be exposed to risk event over the weekend in the form of the Italian referenda and the Austrian election. Both have the potential to be massively market moving, so you don't really want to be exposed to that. So just bear that in mind when you're looking at potentially taking a trade for this month's NFP. What I will say as well is that you want to be a little bit selective about the pairs that you may choose to trade. The euro dollar on a normal day in history would be something that you would look to trade. You might want to think twice about that particular pair given the backdrop of the weekend's events that will unfold. So that pair might act a little bit squirrely, so you're probably best off sitting on your hands. The dollar yen looks interesting. We've got this level up here. This potentially has the ability to catch people who have gone long off that level, and if this is a really bad number, so a really bad number would be circa 130,000 jobs or worse than that would be hugely problematic for the Fed, and the average hourly earnings is expected to be 2% down from 0.2% down from 0.4%. If that comes in 0.1% or worse and you get a number of circa 130,000 to the downside, that is a problem for the Fed, and the potential may be that they won't hike interest rates at their next meeting in a week or so's time. So everyone in the mothers believes that the Fed are going to raise interest rates. There's a belief in fixed income markets that there's going to be another 2 hikes next year as well, but the only thing that could potentially put the kibosh on that, the brakes on that, is a really poor number. And if we get somewhere south of 130,000 jobs, that would suffice. And then just keep an eye on the average hourly earnings as well. If that misses expectation, that's a double whammy for the Fed. And then maybe, just maybe, people will wonder, and maybe that will put them in a predicament to raise this December. So if it comes in sort of 20,000 below, so sort of it's expected in around 180,000, comes in at sort of 160, 170, I think that's going to be acceptable. If the average hourly earnings come in on expectations at 0.2, or in fact they improve, again, that's a bit of a shot in the arm for the Fed, and you probably don't really want to do a great deal. Buying dollars is not really where the value is in this particular situation, because everyone thinks they're going to hike anyway. So what we're looking for our own selfish reasons would be a really poor NFP number south of 130,000, a miss on expectation for the average hourly earnings figure. So keep an eye on that. If you do get involved in taking this trade, remember, drop your size. Don't worry about the fact that you may not get filled if the market drops like 100 pips in the blink of an eye. Don't worry too much about that. So long as you just drop your position size and take the trade, your percentage risk is your percentage risk, right? So yes, you'll be in the position with smaller lot sizes, but you'll still be able to take the trade in a very calm and professional manner. And if it does whipsaw you, it's no big deal. You've lost your risk percentage, and that is all that is on the table. The only thing that I will caution you against, though, is that NFP and big events like these big risk events have the ability to really whip up emotion within the trader, and if that happens, and if you get stopped out, and even if you've dropped your size and you've played it smart from that perspective, if you get dragged into the emotion of it, then that can lead to you taking trades you shouldn't take and capitulating outside of any process that you may have already defined, and you can get into trouble. Those high risk events can act as a conduit to poor trading process. And you know, the day comes to an end, you went into it expecting only to risk 0.5% or 0.2 or something like that on that one trade. You took it, you got whipsawed, and then you got into all kinds of trouble from there, and you can't quite believe what's happened. So be very aware of your own psychology. Be very aware of how you're feeling in these moments, so that you don't get drawn into anything like that. And as I said, anything that you do take anyway wants to be tempered with the fact that there's lots of risk events over the weekend. These are big constitutional issues. The euro is in trouble if this goes the wrong way on both counts. So it could be the start of, as Nigel Farage put it, the head of the Brexit movement. We knocked one brick out of the wall of the European Union, and maybe these now will follow. So very interesting. You probably don't want to be exposed to that over the weekend, just in case there's huge gaps and it jumps your stops and things like that. Brokers won't. You're not protected if that occurs. So be smart. Or you can always choose to just sit on the sidelines and do nothing. This has the potential to be a damp squib. If it's a solid number, then yeah, the Fed's hiking. There's no edge in buying dollars in that from that perspective. I don't think. The edge is in the miss, right? And it being a big miss on expectations. That's where the edge is. All the pre-release sentiment is positive for a Fed hike in December, and if it were to be the opposite of that, or if the potential of that existed because of it was such a dreadful number, then that's where the opportunity will reside. And the Japanese yen and the against the dollar might be something you might want to consider. So just look at all the pairs, though. As I said, be careful with the euro, though, because of what I've already discussed.